Welcome to the first episode of Tech Talk podcast by Zian and Zain. This first episode goes into what if OpenAI closes, what would happen if they did, and how it would affect millions using their products. We're also joined by Siddharth Chopra at the end, where he'll talk about the most important takeaways from this episode.
This episode of Tech Talk is sponsored by Mono. If you've ever wondered which AI model to use for a specific task, you're not alone. There's ChatGPT, Claude, Gemini, Perplexity, and many more. Each one has its strengths. Picking the right one every time, that's a job in itself. Mono solves that. It's an AI chat interface that automatically selects the best model for whatever you're working on. And if you're not happy with an answer, a second opinion is just one click away. Tech Talk listeners get 10 free messages to try out at mono.chat/techtalk. If you decide to become a customer, plans start at just $20 a month. And here's the part that I love. You get access to the best AI models on the planet, and 100% of your first month subscription goes directly to charity. Go to mono.chat/techtalk. That's mono.chat/techtalk. We're so happy to have you here, and we hope you enjoyed today's episode. $800 million people use ChatGPT. It's the fastest growing consumer product in history. OpenAI just raised over $100 billion. Sam Altman, he's on magazine covers. Everyone thinks this company is untouchable. But what if I tell you it's not? What if behind all of that growth, OpenAI is actually under serious pressure? Because when you really break it down, there are a few fundamental reasons why OpenAI could actually struggle to survive long term. The first one is something called cash burn. OpenAI is spending money at a level that's honestly hard to comprehend. This isn't like building a normal app or a startup. They're building some of the most advanced AI systems in the world, and that comes with insane costs. We're talking massive data centers, extremely expensive chips, constant model training, and huge research teams. At one point, they were talking about building enough computing infrastructure that could cost up to $1.4 trillion over time. Even though that number has been revised, they're still planning to spend around $600 billion on compute over the next few years. That's not just expensive, that's on a completely different level. Now yes, OpenAI has raised a huge amount of money. Over $100 billion from investors and partners. But here's the key thing most people miss. Raising money is not the same as making money. It's just funding. It keeps the company alive, but doesn't mean the business is sustainable. So right now, OpenAI is operating in a position where it's relying heavily on investor capital to keep going. And that becomes risky, because if that funding ever slows down or expectations change, the company is left with a massive ongoing cost and no real safety net. The second problem is revenue. On the surface, it looks amazing. Hundreds of millions of users, global adoption, everyone's talking about it. But when you look closer, the numbers don't really work. OpenAI has around 800 million users, but only 6% of them actually pay for the product. And most of their revenue comes from subscriptions, which means they depend heavily on people choosing to pay every month. But majority of the users don't. At the same time, every single interaction on ChatGPT costs OpenAI money. Every question, every response, every time someone opens the app, there's a real cost behind it. So what you end up with is a system where millions of people are using the product constantly, but most of them aren't even contributing financially. That creates a gap where costs keep rising, but revenue doesn't keep up at the same pace. Now they are trying to fix it. They've started experimenting with ads and new business models, and ads could eventually generate lots of money, but compared to how much they're spending right now, it's still not enough. And there's another issue. If OpenAI pushes too hard on monetization, whether that's more ads or stricter paywalls, users can just leave. There are so many alternatives right now that switching is incredibly easy. people aren't locked into one AI. OpenAI is stuck in this difficult situation where they need more revenue, but they can't push users too far without losing them. The third problem is probably the most interesting one. OpenAI is trapped between its competitors and its partners, and in most cases, they're the same companies. Their competitors aren't small startups, they're companies like Google, Amazon, and Meta. These are companies that already make hundreds of billions of dollars every year from businesses like search, ads, and cloud computing. That means they can afford to run AI at a loss for a long time. They can give it away for free, bundle it into products people already use, or cut pricing completely. OpenAI doesn't have that advantage because AI is their main product. But at the same time, OpenAI depends on these same companies to operate. They rely on them for cloud infrastructure, chips, networking, and data centers. So the same companies they're competing against are also the same ones providing the core resources they need to run their products. That creates a situation where they're being squeezed from both sides. One side, competitors can outspend them and scale faster. On the other side, suppliers take a share of the value and control key parts of their infrastructure. Even if OpenAI continues to grow, there's a real risk that other companies end up capturing more value from AI than OpenAI itself. When you put all of this together, the situation becomes pretty clear. OpenAI is spending massive amounts of money. Its revenue isn't scaling fast enough, most users aren't paying, competition is intense, and it depends heavily on external partners to operate. That's not a very sustainable setup. And this is why some analysts are starting to suggest that OpenAI could run into serious financial trouble in the next few years if something doesn't change. But that doesn't necessarily mean OpenAI is just going to disappear. Companies at this level don't usually shut down overnight.
So what exactly are other AI labs doing differently that OpenAI isn't? Let's start with Google. Google is part of a set of services, including Gmail, the Google search engine, YouTube, and others collectively owned by Alphabet. This provides them with a lot of money to use, as they are already a profitable business. But how does their AI, Gemini, actually shape out? Gemini's business plan is based on distribution first, to get a lot of customers and consumers quickly. And to do so, they implemented Gemini into Google Search, which was a very smart move, as well as into other Google products used by millions, for example Gmail and Maps. This gives Gemini a competitive lead, as it can embed its AI faster into its previously existing products. It also creates habit. Asking Gemini is a free advertisement for Google. OpenAI had to start from scratch, like app downloads and marketing, as AI models is their only field. Google also monetizes indirectly via ads, which means they make money from Gemini without charging users directly for AI use. With Gemini, Google Search grew 34% using their AI overviews, Google Cloud grew 48% to $17 billion per quarter with AI integration, and bundles like Gemini Advanced with Google and Storage sped this up. Google Gemini is also backed by Alphabet's $175 to $185 billion in capex and cash reserves, which minimizes standalone AI risk. OpenAI is the definition of a standalone AI company. Another reason why Google is so dangerous is that it has data. I mean, a lot of data. And in AI, more data means better model training. Waymo, the self-driving car company acquired by Google, collects real-world spatial and environmental data every single day. Google Street View and Google Earth both add more environmental data to Waymo. And because this is continuous, commercially funded, it's going to help Google create better, bigger, and faster models in the future. Both of these examples that collect data also collect revenue, which is why Google has a very successful model to provide to Gemini. Number 2, Anthropic. Anthropic is similar to OpenAI in some ways. It's a standalone AI company with no search engine, no cloud business, and no other source of revenue to use. But aside from that, they are two very different companies. The main difference is that they're aimed at different customers. OpenAI goes for a number of users, sitting at 800 million users, subscriptions starting at $8 a month. Anthropic is doing the opposite. They are going for revenue per user. Anthropic earns significantly more per user than OpenAI does, which means they need far less users to generate meaningful revenue. The math works differently, and so far, it's working faster. Their annualized revenue run rate has reached $14 billion, and Anthropic got there in roughly 14 months. OpenAI took 3 years to hit $20 billion. But part of what drives that efficiency is focus. While OpenAI, Google, and DeepSeek have taken a generalized approach, building tools for everyone and everything, Anthropic has gone after specific high-value markets. For example, Claude Code targeted developers directly and generated $2.5 billion in annualized revenue run rate by early 2026. Anthropic is creating specialized tools to make professionals' work faster and easier, which makes them both more valuable. Additionally, Anthropic's primary customers are enterprises, companies like those using Amazon Bedrock and Vertex AI, as they have long-term contracts. Once a business builds its operations around Claude, switching isn't only inconvenient, it's also costly. For example, the Pentagon. After using Anthropic's products, it's now transitioning to OpenAI, and that process alone is taking 3 months or longer. That's not luck, that's intentional. Where Anthropic also separates itself is trust. They publish detailed technical papers alongside their model launches, giving developers actual visibility into how their systems work. OpenAI largely doesn't. Their releases are what the industry called black box. You always see the output, but not what actually is going on. For enterprise clients, you need to understand what they're deploying. That difference is huge. Anthropic is still not profitable. They're burning roughly $3 billion in 2025. However, unlike OpenAI, they're considered more operationally efficient, lower cash burn, a more specific target market, and a business built around forecasted revenue rather than hoping enough customers stay subscribed to month to month like OpenAI is. They're not trying to do the best for everyone and everything. And right now, their strategy seems to be working, and it might just be their biggest advantage. And finally, DeepSeek. DeepSeek stands out from major players like OpenAI, Anthropic, and Google as a Chinese AI company built on strong global funding and national support. Where Western companies center on enterprise tools and business customers, DeepSeek's strategy is to make advanced AI models widely available across China's tech, education, and other sectors. The company gained global attention in 2025 after its large language model, DeepSeek V2, demonstrated performance comparable to GPT-4 and Cloud 3 in reasoning, coding, and complex problem solving, placing it among the world's leading AI labs. And the efficiency behind it is absolutely crazy. DeepSeek V3 was trained for an estimated $5 to $6 million, compared to the $100 million estimated for GPT-4, approximately 1/18 of the cost. Despite this, DeepSeek V3 matches or slightly outperforms GPT-4 across key skills, particularly in maths, coding, and efficiency. By mid-2025, the company's annualized revenue had reached an estimated $220 million. DeepSeek's commercial strategy is built around one core advantage: exceptionally low inference costs, which it passes on to Chinese firms through subsidized pricing. The cost efficiency is driven by multiple factors. Number 1, DeepSeek uses a mixture of experts architecture, which activates only 37 out of its 671 billion parameters per query. Rather than running the whole model, mixture of experts selects 2 to 8 specialized submodels, tailored to each input, significantly reducing GPU memory and power consumption. Number 2, DeepSeek's highly optimized code allows its model to run faster while using less memory. And number 3, Chinese electricity and compute costs are government subsidized. H800 GPUs ran for roughly $2 per hour compared to $8 to $15 per hour for H100s in the US. On the pricing side, DeepSeek uses dynamic and volume-based strategies. Off-peak discounts encourage usage during low-demand hours, while enterprise clients, such as factories and government agencies, operate under volume-based contracts rather than flat-rate pricing. Finally, all of DeepSeek's models are open source, eliminating API licensing fees entirely, making adoption faster.
To understand where OpenAI is heading, you first need to understand how it actually makes money and what its long-term plan looks like. Right now, OpenAI makes money in three main ways. The biggest one being consumer subscriptions. This is basically people paying around $20 a month for ChatGPT Plus, and this alone makes up roughly 70% of the company's total revenue. Now on the surface, that sounds really strong. Millions of people paying monthly. That means steady income and predictable cash flow. But when you look closer, there's a problem. That revenue is not driving profit. It's mostly covering costs. Because running ChatGPT at scale is extremely expensive. The cost of compute, infrastructure, and maintaining the system so hundreds of millions of users is so high that even billions in subscription revenue doesn't go that far. So instead of building strong margins, subscriptions are mostly just keeping the system running. The second stream is enterprise and API licensing. This makes up the remaining portion of the revenue, and it's where companies like Stripe, Shopify, Morgan Stanley, and T-Mobile pay to integrate OpenAI's models directly into their own products. This side of the business is much more stable. These aren't casual users who can just cancel instantly. These are long-term contracts, and once AI is embedded into a company's workflow, switching becomes slower and more complicated. So this is a part of the business that actually has potential to scale in a more predictable and sustainable way. The third stream is newer and says a lot about the situation OpenAI is in right now. They've started introducing ads into ChatGPT. Now this isn't something every user sees yet. Right now, ads are only being tested with certain free users in specific regions. It's a gradual rollout, where they're experimenting before expanding it more broadly. What makes this interesting is that Sam Altman previously described ads as a last resort, and now they're being tested. That shift is very important. It shows that the company isn't casually exploring new ideas. It's actively looking for additional revenue because the current model isn't enough on its own. Now, ads could eventually become a major source of income, especially because users are typing in exactly what they want, which is very valuable data. But building an ad business at scale takes time, and right now, it's still in its early stages. Looking forward, OpenAI is exploring more bigger strategies. One of them is consumer hardware. The idea is to move beyond just an app and build devices that integrate AI more directly into everyday life. Reports suggest they're aiming for tens of millions of units, which would open up an entirely new revenue stream. The second strategy is even more ambitious. It's called outcome-based pricing. Instead of charging a flat subscription or API fee, OpenAI wants to take a percentage of the actual value their AI creates. So if a company uses their model to generate revenue, make a discovery, or improve efficiency, OpenAI takes a cut of the outcome. It's a very different approach compared to traditional software pricing, but it also introduces uncertainty. It's already making some researchers and developers uncomfortable. Now this is where things get more complicated. OpenAI's business model is structurally different from most of its competitors, and not in the good way. Their margins are relatively low, sitting at around 40%. The main reason for that is simple. OpenAI pays for the compute. Every time someone uses ChatGPT, OpenAI is covering the cost of that interaction. They're not pushing those costs onto users or external infrastructure. So as usage increases, cost increases with it. At the scale of hundreds of millions of users, that becomes extremely difficult to manage. Now compare that to companies like Google or Microsoft. They have profitable businesses outside of AI, like search, cloud computing, advertising, enterprise software. That means they can afford to run AI at a loss even if they need to. They can invest heavily, scale aggressively, and worry about profitability later. OpenAI doesn't have that kind of flexibility. AI is the core business. So every dollar spent has to eventually be justified by AI revenue alone. So when you put all of this together, you start to see the real challenge. OpenAI has massive scale, but scale alone isn't enough. They need to convert that scale into sustainable revenue. The company is targeting around $280 billion in revenue by 2030. To reach that, they need to grow from around 800 million users today to roughly 3 billion users. But more importantly, they need to have a much higher percentage of those users to actually pay. Right now, about 6% of those users are paying anything at all. To hit their targets, that number would have to increase dramatically, potentially reaching hundreds of millions of paying users. And that's really the core of the situation. It's not about growing anymore. It's about turning that growth into a business that can actually sustain itself. Because if they can't do that, then no matter how big the user base gets, the underlying problem doesn't go away. It just scales with it. The numbers behind OpenAI tell a story that's honestly hard to wrap around your head. Because on the surface, everything looks incredible. The growth is insane. Back in 2023, OpenAI was generating around $2 billion a year in revenue. By 2025, that jumped to somewhere between $13 and $20 billion, depending on the estimate. And by 2026, they're projecting $25 billion annually. That's roughly a 3 times growth rate year over year. By any normal standard, that's extraordinary. That's a kind of growth most companies never even come close to. But here's where things start to get complicated. Because while revenue is growing fast, expenses are growing even faster. The biggest cost OpenAI has is simply just running its models. Every time someone opens ChatGPT and types a message, it costs money. That cost is what's known as inference cost. And at the scale OpenAI is operating at, it adds up very quickly. In 2025 alone, inference costs reached about $8.4 billion. And by 2026, that number is expected to rise around to $14.1 billion. That's just to run the product. That's before salaries, before research, before expansion. Just keeping the systems running. Now think about that for a second. They're generating tens of billions in revenue, but a massive portion of it is being spent just to serve users. And it doesn't stop there. On top of these costs, OpenAI also has to pay a significant share of its revenue to Microsoft as a part of their cloud partnership. Around 20% of everything OpenAI earns goes straight back to Microsoft. Across 2026 and 2027 combined, that payment alone is expected to exceed $13 billion. So a large portion of every dollar they make is immediately going out the door. When you combine all of this, the situation becomes clearer. In 2025, OpenAI burned through roughly $9 billion. And in 2026, that number is projected to jump to around $17 billion. That's nearly double in just 1 year. The obvious question is, how are they still operating? The answer is funding. And not just normal funding, massive funding rounds. Microsoft had already invested around $13 billion before 2025 even began. Then in March 2025, OpenAI raised another $40 billion led by SoftBank. By early 2026, they closed an even larger round, around $122 billion, from companies like Amazon, Nvidia, and SoftBank. That pushed their valuation to roughly $850 billion. So on paper, it looks like they have more than enough money. But here's the part most people don't realize. A lot of this funding isn't truly independent. What analysts are pointing out is something called circular deals. OpenAI raises billions from companies like Microsoft, Amazon, and Nvidia, and then spends a large portion of that same money paying those companies for cloud services, chips, and infrastructure. So the money flows in and then goes straight back out. Which means that even though the funding members look massive, a significant portion of it is essentially just covering operational costs. It's not building long-term financial stability. And despite all of this, OpenAI is still not profitable. In fact, their margins are actually getting worse. Their gross margin has dropped from around 40% in 2024 to about 33% in 2025. And the main reason is simple. Costs, especially inference costs, are rising faster than revenue. Right now, OpenAI doesn't expect to become cash flow positive until around 2030. which means for the next few years, they're still going to be relying heavily on external funding. Now, to put that into perspective, by 2030, they're projecting revenue somewhere between $85 billion and $280 billion. But at the same time, they're planning around $600 billion in total compute spending. So even with massive growth, the scale of spending is still enormous. They're also considering IPO around 2027, and the idea behind that is pretty clear. It's a way to shift the burden of funding from private investors to public markets. So when you take a step back and look at the full picture, it's kind of wild. You have a company growing faster than almost anyone in history, hundreds of millions of users, tens of billions in revenue, massive global influence, but at the same time, you have expenses growing even faster, billions being burned every year, heavy dependence on outside funding, and profitability still years away. So OpenAI right now isn't just a high growth company, it's a company making a massive bet. A bet that can scale fast enough, monetize effectively, and reduce costs enough. Before that, the funding window runs out, and if that bet works, they could become one of the most valuable companies in the world. But if it doesn't, then all of this growth becomes a lot more fragile than it looks.
If you're into AI, maybe you already know about the AI bubble. However, if you don't know what the AI bubble is, let me explain. Investors are pouring a whole lot of money into AI, believing it will revolutionize the world. One of the companies they are pouring money into is, you guessed it, OpenAI. However, companies such as OpenAI are not yet making enough money to justify their costs, which creates a bubble of overvalued hype that could pop at any time. Their revenue is far less than their valuation. Let's do the math. By doing some research, OpenAI aims to have surpassed $280 billion by 2030. That's 3 to 4 years from now. That means they need to double their revenue year on year to get there. The bubble isn't looking too good right now for OpenAI. Their valuation is $852 billion in April 2026, and Sam Altman still needs more, not wants more. As I told you, they will aim to reach $280 billion by 2030, but OpenAI will still require more money to run, most probably hitting $1 trillion valuation and more by then. Let's take a trip down the bubble's history as experienced in the past decades. Number 1. The dot-com bubble in the 1990s. The dot-com bubble was caused by a massive rise in US technology stock values in the late 1990s, fueled by heavy investment where internet-based startups made little to no profit. The tech stock market Nasdaq grew from under 1,000 to 5,000 by the year 2000, which led to a massive crash that year, raising $5 trillion in market value by 2002. Nasdaq then plummeted down from the peak of 5,048 on March 10, 2000 to 101.39.9 by October 4, 2002, its stock value market in 1995. This was a massive decline of 76.81%. Most dot-com startups went bankrupt, but even larger ones like Cisco, Intel, and Oracle were hit hard. Their stock prices decreased by around 80%. It took Nasdaq 15 years to recover from this incident and reclaim its high of 5,048. The 2008 financial crisis is another example. Lenders handed out risky loans, often to borrowers with little income, fueling the housing price bubble because it was believed that housing prices would continue to increase. Banks repackaged and sold loans as safe investments, spreading the risk globally. When prices peaked in 2006 and then collapsed in 2008, over $19 trillion in household wealth was wiped out. But with the 2008 financial crisis and the internet bubble, both of them could have been prevented. I said that the dot-com bubble wiped out $5 trillion, the financial crisis $19 trillion, so we can expect the AI bubble to wipe out a very large amount of value as well. Forbes believes the AI bubble could wipe out $50 trillion from Nasdaq. We've gone through examples of how the 2008 financial crisis and dot-com crisis affect so many people. But how does the AI bubble link into this? I'm going to take you through the same diagram from Financial Times that links up all the deals which I used before. You see, OpenAI has too many partners and deals made to count. They have Nvidia along as a customer, Corby as a supplier, investor and customer, Broadcom for custom chip design, Oracle for data centers, Microsoft for AI integration, Amazon as a cloud and AI integration partner. That's the main ones for you there. So Nvidia, Corby, Broadcom, Oracle, Microsoft, and Amazon. All these commitments total over 1 trillion deals. And OpenAI is going to pay this off in 5 years. 5 years is a very short amount of time for OpenAI. Not 10 years, not 15 years, 5 years. And these are only some of the main deals. OpenAI needs to pay all of this back. Now, let's look at venture capital investment. In total, around 120 billion. But with all the funding rounds, it's added to a lot. Not as much as hardware, but still a lot for the $120 billion figure. If the AI bubble goes pop, OpenAI would be hit extremely hard. Research analysts believe OpenAI is at high risk due to low profitability right now and extremely high spending and cash burn. The effects would be, the biggest one being, OpenAI fighting for survival. OpenAI would be forced to restructure their entire company, cut costs, and abandon less critical projects, like they recently did with Sora. OpenAI's infrastructure deals would also take a hard hit. OpenAI would be stuck paying for unused compute, or the company would have to renegotiate deals, as when the AI bubble pops, many Nasdaq companies would get hurt too, including their partners Nvidia, Oracle, and Corby, just to name a few. And revenue would also slow down massively. If the bubble bursts, it would mean AI demand was overestimated, causing fewer companies to pay for APIs, one of OpenAI's main revenue streams, and there would also be more pressure to become profitable. Most likely, the bubble will burst before OpenAI becomes profitable, creating doubt if they will reach their target by 2029. OpenAI could also lose 50 to 80% of its valuation if the bubble bursts. Many of OpenAI's products are integrated into businesses and startups. Here are some examples. Lovable, recognized as the fastest growing startup in the world, generates websites and web apps using text prompts. Lovable has 8 million users, a $6.6 billion valuation, and an annualized revenue run rate of $400 million. Lovable uses OpenAI's models as key components to build apps, debug, and update websites through prompts. They are highly dependent on OpenAI, but use a multi-model approach much like most companies, using Anthropic's and Google's models as well. Cursor, another big company which mixes coding with AI, has 1 million daily users, a $50 billion valuation in March 2026, and an ARR of $2 billion. Guess what? It also relies on OpenAI, but relies very heavily. It uses OpenAI's models, GPT-4o, GPT 5.1 Codex Max, and GPT-o1, not just for one task, but many. They use for agentic workflows, code auto-completion, and code generation, just to name a few. However, they are trying to reduce their dependence on OpenAI, as well as Anthropic, which they are a customer of too. Replit is another big name in coding with AI that also uses OpenAI to power its AI assistant, doing tasks like generating code and debugging with GPT-4o. But coding isn't the only area where OpenAI is integrated. Science is another. Consensus is an AI academic researcher. It helps you speed up research, finding and analyzing science research articles 10 times faster. And one example of Consensus reliance on OpenAI is pretty heavy, and it's for a very important task, eliminating bias in search results. Consensus distinguishes how credible sources, not using its popularity and user preference. This prevents clickbait and SEO results that often mislead users with bias and misinformation during research tasks, according to OpenAI. They collaborated with OpenAI to create a customized version of GPT-4 to generate plain language summaries of Consensus results, providing users with reliable, evidence-based information. If OpenAI closed down, over 1 billion business customers would be affected. And OpenAI has already done the trick of closing down a product and then losing a whole lot of customers. Sora. OpenAI shut down Sora because it was consuming too many AI chips and it wasn't profitable. For your reference, Sora was its most hyped product behind ChatGPT. When Sora closed down, OpenAI lost a $1 billion deal with Disney on Sora, allowing users to generate videos with their favorite Disney characters, and more. It also lost a very large user base. Sora gained $1 million in only 5 days, making it one of the fastest growing apps. That's around 200,000 downloads a day, faster than ChatGPT. Growth peaked early, but then saw a large decline after the hype ended and Sora announced its closure. So what could we expect when OpenAI closes down? And how does this affect startup businesses? Number 1. Consumer businesses will have to migrate to competitors like Anthropic or Google, which will be costly if they have deeply integrated OpenAI's products, much like Consensus. Also, migration may cause quality to reduce at first, as different models behave differently and require prompt adjustments, infrastructure changes, and retraining. Number 2. Consumer businesses in technology may face disruption or even go unoperational if OpenAI was to close, as models no longer working could cause service outages, broken features, or degraded performance. For example, a company like Replik could see its AI coding assistant suffer degraded performance, as it would be unable to access OpenAI's models, part of its multi-model approach, and it may cause broken features, even though there are safeguards in place. That's a very important part. Safeguards exist, but disruption still happens. Number 3. Consumer businesses will lose key features, and after even moving to another AI model, still lose a lot of quality. Some companies rely on OpenAI for specific capabilities, like certain reasoning or fine-tuning. A research tool like Consensus might lose its high-quality summarization or bias filtering, even after switching providers, as we are partners with OpenAI, who does fine-tuning for filtering. Losing this key function would mean research results would be less reliable and more prone to misinformation. Of course, Consensus could rebuild the feature with another AI provider, but it would take a lot of time, cost money, and that could result in lower quality initially.
So after looking at all of this, the spending, the competition, the business model, the big question becomes pretty obvious. Will OpenAI actually close down? Because when you hear numbers like billions in losses, huge infrastructure deals, and competitors with deeper pockets, it starts to sound like the company might be heading towards a wall. But the reality is a bit more complicated than that. Firstly, OpenAI isn't some tiny startup running out of money in a garage. It's one of the most influential AI companies in the world right now. It has hundreds of millions of users, massive enterprise contracts, and some of the largest technology investors backing it. So the idea that OpenAI would suddenly shut its doors and disappear overnight is extremely unlikely. But that doesn't mean everything is safe either. What makes OpenAI's situation risky is the structure of the company itself. Unlike Google, Microsoft, or Meta, OpenAI doesn't have a giant profitable business sitting underneath its AI research. Google can afford to spend billions on Gemini because its whole company isn't based on the AI. Same for Microsoft. But OpenAI doesn't have that kind of safety net. AI is their entire company, and that means the economics have to work eventually. Right now, it isn't. The company is growing extremely fast, but its costs are growing just as fast, and sometimes even faster, because every model improvement requires more computing power, more data centers, and more hardware. And running a service like ChatGPT for hundreds of millions of people isn't cheap. Every single query costs money, which means even when the product is wildly successful, it can still lose billions. This is why OpenAI keeps raising massive funding rounds. The company has already received tens of billions of dollars from investors and partners like Microsoft, Amazon, Nvidia, and SoftBank. That money is what keeps the company running while it tries to figure out how to turn AI into a truly profitable business. So the real question isn't, will OpenAI close tomorrow? The real question is, can OpenAI become a profitable company before money runs out? Because if it can't, something will eventually have to change. And historically, when companies reach this point, three things usually happen. The first possibility is restructuring. That means cutting costs, slowing research, cancelling projects, and focusing only on the parts of the business that make money. The second possibility is deeper integration with a partner. OpenAI already works closely with companies like Microsoft. It's very possible that over time the relation becomes even tighter, to the point where OpenAI effectively becomes a part of a larger tech ecosystem. The third possibility is acquisition. If the economics become too difficult for OpenAI to handle alone, a major tech company could simply absorb it. But here's the important thing to understand. Even if something like that happened, it wouldn't mean AI failed. It wouldn't mean the technology disappears. It would just mean that the company leading the charge changes form. This has happened before in tech history. Many of the companies that built the early internet didn't survive, but the internet itself did, and something similar could happen here. OpenAI might remain independent and eventually become profitable. It might merge deeper into a larger tech company, or the entire AI industry might go through a correction if the current hype slows down. But the idea that OpenAI simply disappears while AI keeps growing around it is probably the least likely scenario. So the real conclusion here is that OpenAI probably isn't about to shut down anytime soon, but its current model is under enormous pressure. And unless the economics of AI improve, either through new revenue streams, lower computing costs, or deeper partnerships, the company will almost certainly have to evolve in some major way over the next few years.
Worst case scenario, OpenAI runs out of money and they go bankrupt. OpenAI would then presumably file for Chapter 7, selling off all their assets, technology, and everything else they own. Some investors will buy it all, but the likely action will be that Microsoft will acquire OpenAI. Of course, it's possible Microsoft will be unable to. After bubbles popped, they will be working to increase their revenue, valuation, and return to their original market cap, rather than working on buying out other companies while also working to keep their own. But it's most likely Microsoft in the end will acquire it. We already know that Microsoft CEO, Satya Nadella, is interested in AI and the company. Microsoft is one of OpenAI's most loyal investors, already having invested $13 billion into them. Microsoft also has a deep partnership with them, and has access to all of OpenAI's intellectual property, excluding consumer hardware. The company is also a legacy firm like Google, providing them with a reliable cash flow from their own services like, for example, Microsoft 365. And they received 49% of profits made by OpenAI. Here's the breakdown. Microsoft has 27% ownership in OpenAI, valued at around $135 billion in stake. Non-profit OpenAI Foundation has around 26% equity from its board of directors. Employees take up around 25%. Investors take up the rest, around 22%. SoftBank is one of the biggest, which could compete against Microsoft, taking 13%. However, SoftBank's ownership is distributed across its fund and investors. Basically, they've invested in OpenAI through their investment vehicles, mainly vision funds, as well as co-investment structures alongside partners. SoftBank is also helping in the Stargate project, a 1 gigawatt data center in Abu Dhabi, UAE, by investing $1 billion in collaboration with OpenAI and SB Energy, which will be an execution partner for the project. The other 9% is owned by a majority of venture capital firms and funds. SoftBank also has other investments, such as owning 90% of ARM Holdings, which could mean they would be willing to acquire OpenAI if its valuation was driven down after the bubble pops. However, the difference between ARM and OpenAI is that 90% stake of ARM Holdings is only valued at $185 billion, while OpenAI is valued at $852 billion, which would be usually around how much SoftBank would pay more or less for a full stake. But if the bubble bursts, as I said, OpenAI's valuation will go down perhaps 40 to 50%, or more according to analysts in the topic. I predicted SoftBank will get extra shares to reduce their loss from OpenAI, and then try to acquire OpenAI. Because if the valuation goes down, so does the cost. This is a theory, but a Microsoft acquisition seems more probable. What about an Amazon acquisition then? Amazon has a lot of AIs they are developing, but there isn't as buzz around the forefront models. Rufus has been integrated into Amazon, a conversational shopping AI which you can ask questions about a product. You might have seen it when you were shopping around. Amazon Q is a generative AI-powered assistant designed specifically for businesses and work. It can summarize internal documents, answer questions about company policy, analyze data, and assist with coding like Q Developer. It connects to company data sources like Wiki, Salesforce, and Jira. Amazon Lex is a chatbot builder that allows developers to build their own conversational AI chatbots, both voice and text, for applications. It is frequently used for creating customer service bots. Amazon also has a health AI, an agentic AI assistant which can provide health guidance, help manage prescriptions, and can connect users with one medical providers. You also have the Amazon Artificial General Intelligence Lab, the AGI Lab, a small team of researchers, engineers, product thinkers, and designers focused on building useful AI agents across San Francisco and Boston. In late March 2026, Amazon agreed to a $50 billion multi-year strategic partnership with OpenAI. It's $15 billion upfront, the other $35 billion to follow based on different conditions. AWS, Amazon Web Services, and OpenAI will co-build a stateful runtime environment powered by OpenAI's models, so Bedrock customers can build generative AI apps and agents. AWS will also distribute OpenAI Frontier, a program for building and managing AI agent teams. And OpenAI will help develop custom models for Amazon's customer-facing products. If the deal follows, the $50 billion will give Amazon roughly 6% of equity in OpenAI, very less compared to Microsoft or SoftBank. So here's how much money all these competitors can put on their table. As of April 2026 figures, Microsoft has $665 billion in assets, valued at $2.7 trillion. Amazon has around $550 billion, and their valuation is $2.3 trillion. SoftBank, an investment firm unlike Microsoft or Amazon, has $330 billion, but it is high volatility focused, so if a startup's valuation increases or decreases, their assets follow too. OpenAI has also cooperated with Amazon and signed a 7-year, $38 billion deal to buy cloud services from Amazon.com to give OpenAI access to hundreds of thousands of NVIDIA graphic processors to train and run its artificial intelligence models in November 2025. But Amazon already has a stake in Anthropic, $8 billion, which is around 10 to 20%, but the real figure is unknown, so it would be unexpected for them to acquire OpenAI. And the final contender is NVIDIA. They invested $30 billion in the latest funding round. And while the percent of equity in OpenAI isn't disclosed, we can predict 3 to 4%. NVIDIA has around $206.8 billion in assets, very far from giants like Microsoft and Amazon, but its valuation is almost double at around $4.3 billion. So, what's the most likely acquirer? Here's the orders. Number 1, Microsoft. They have the most stake, and Satya Nadella has expressed interest, and so has OpenAI, as well as Microsoft. Number 2, SoftBank. They own the second largest stake, and if the AI bubble were to pop, it would put them in a great position as the valuation would go down too, the cost would go down too. Number 3, Amazon is unlikely to acquire OpenAI, but they do have the option. And number 4, NVIDIA may purchase OpenAI, but this also seems unlikely, as they don't have the ability to pay the large amounts OpenAI may ask for. But here's the thing with SoftBank. Them, along with others, just set up a firm to develop high-performance AI on Monday the 13th of April 2026, according to the Japan Times. But the other companies they're working with might just be the path to an OpenAI acquisition. They're working with Sony, NEC, and Honda as majority stakeholders, as well as several others as minorities. If they were all to come together in the future, they could jointly acquire OpenAI. Ultimately, their goal is to develop so-called physical AI that could also be used for controlling robots. And with OpenAI acquisition, in the future, they could be put on the fast track to making this happen. The company plans to apply for an AI development support program, as well from the New Energy and Industrial Technology Development Organization in Japan, a national research and development agency, which began accepting proposals in late March. With the program, they'll be given a total of $1 trillion in Japanese yen, we are 5 years from fiscal 2026. That's roughly $6.29 billion. For now, we can only wait, and time will tell. We're now joined by Siddharth Chopra. Siddharth was an ex-software engineer, now a YouTuber that does case studies on tech, AI, and business with over 50,000 subscribers. He'll talk about everything we discussed in this episode, going to the most important points. He recently made a video on his YouTube called OpenAI's Collapse Has Already Started. We'll be using that video to ask him questions. In that video, you actually compared the startup WeWork to OpenAI. Could you explain to us how they're closely related?
Okay, so the similarity which I saw with OpenAI and WeWork was that WeWork has an insane growth out there. It had literally insane growth out there. Okay, the same thing happened with OpenAI as well. It has an insane growth. Okay, their founder both have a crazy vision. Adam Newman vision was that okay, I'm creating a community out there and all those stuff, but they were just renting out the offices. OpenAI vision was that OpenAI is also telling investors the crazy vision. Okay, we are creating AGI. We are creating an AI system 100x better than any human all combined together out there. Okay, so that's the vision they are telling. So in that sense, their growth was insane in terms of numbers, in terms of valuation, and how fast they were growing. Okay, but now coming to this another similarity. Okay, WeWork was losing a lot of money. Okay, the money they were making and the money they were losing.
Why is OpenAI burning through cash so quickly? Is it mostly data centers, GPUs, employees, research, or something else?
I think major problem is GPUs because they are too costly out there. And especially GPUs, it's mean electricity, water, and land. I think that's a big problem.
Okay, so in that video, you talk about server costs, GPUs. Could you explain how that works in more detail?
Yeah, okay. So what's happened here is that in our Web 2 era, in what I mean, maybe you can say Web 1 or Web 2 era, during the SaaS company, the .com bubble, what happened is that every company wants to become the tech company because there was a reason. If you have a lot of people, your server cost would remain the same. For example, it will cost $1 for a user, okay? But tech is ready. Your cost is just the server cost, but it will not increase per user base. For example, okay, you have taken a server which will cost $1,000 and it can accommodate, let's say 1 lakh or something like that. Okay, so now what will happen? If there would be 2 lakh people, you just need to spend another server that is $1,000 out there. And again, if there would be increase of, let's say, 10 people out there, the server cost remains the same. You don't need to spend a lot of money.
Yeah.
So what happens? Okay, there's a fixed cost, and as per the users get increased, you don't need to pay much. And that's the reason every VC, every investor was crazy on tech company. Uber said, okay, we are tech company. Airbnb said we are a tech company. The reason was that the investor thinks, okay, if it's a tech company, it's scalable. If it is scalable, then it can earn a lot of money. So let's put the money. Once the company would scale, we'll make a lot of money out there. So that was their simple equation. The same thing was done by Google, Amazon, Netflix, Airbnb, or any other company out there, right? So that was our SaaS era. Okay. Even that the same equation is with Netflix. Let me give you an example. If a movie gets released in a theater, it will earn a lot of money out there. Okay, from a single movie. But what Netflix has said, okay, you will have a fixed monthly fees and you can watch as many movies as you want out there. So per user, the movie which is released in theater will earn more money. But okay, the same movie, if it's released on Netflix, it will not earn that much kind of money. But if Netflix have a lot of millions of subscribers out there, then the equation gets changed. Because with scale, your fixed cost remains the same, but a lot of people are paying for it. So the maths would work out there, right? But in the case of OpenAI, it's completely different. Every new user, every new query, the ChatGPT query we are asking, it's a cost to them. So it's not that scalable out there because you don't have a fixed money. Okay. So for example, in the server equation, the GPUs, it will cost you how much you are using out there. That's the reason like we have a usage limit in every platform. We have usage limit in Gemini, Claude, Anthropic. We don't have unlimited access out there. YouTube,
Of course.
you have unlimited access. Netflix, you have unlimited access. Amazon, you have unlimited access. You can use it how many times you want in a day, right? Because it's not charging them, but for them there's a hidden cost. That every query has a cost. So that's the reason the equation is completely different.
OpenAI has subscriptions, enterprise deals, and API access. Slowly start rolling out ads. Which one of those do you think matters the most in the long term?
I think it's majorly of enterprises deals, because that's where they are actually making some money. On ads, they're losing money. On my video, like I compared, okay, for a query, the compute cost is much higher than the ads cost out there. So yeah, I don't think ads is sustainable. Maybe in a very long run, I can see okay, if the compute price will go to a very less amount, at that time maybe ads could sustain. But eventually, I don't think so. Okay, ads is a solution out there. Maybe the solution could be that Elon Musk is trying to put data center in space, like AI data center in space, because on space you don't need cooling, so you don't need water out there, and you even don't need electricity because there would be solar energy out there 24/7. But I don't know till when we will be able to implement this, but I think that's a long-term goal.
Do you think OpenAI's current plan will actually become profitable, or does it only work if investors keep on giving them more money?
I think their current plan, you mean the API enterprise and is ads. So if you will have some breakthroughs out there, like reducing the price to a lot of extent, then this model could work. Otherwise, we haven't seen any other model out there, because till now all the SaaS companies and tech companies, they just depend on ads. Like everyone can use YouTube for free. The reason is that it's because of ads, right?
So they'll have to eventually restructure in order for them to be profitable.
Or maybe they have to shift on something very big, like kind of robotics or something like that. So maybe they could have sell hardware because they have hired Johnny Ive.
Yeah.
Right. So maybe if they'll run some crazy hardware and it just worked out. I don't know.
What would be the effect if OpenAI removed their free plan, as they only have a small user base subscribed? I think only 5%, maybe 7% is subscribed to OpenAI.
I think if OpenAI would remove their free plan, if everyone decides, okay, let's remove the free plan, it would work. But if only OpenAI would remove the free plan, user would not even be able to try the new features. Because what's happening? Once I've tried the Anthropic new model, I get to know, okay, this model is crazy. I need more usage. I'll purchase it. But at the first place, I tried the free model. Then I became their paid customers. But that thing would change if they will just remove the free model. Nobody would try the free features. If everyone decides to remove it, then it will make sense, or otherwise it won't.
Do you think OpenAI's biggest problem is its technology, its business model, or even its leadership?
Its business model, and not just for OpenAI, but for other companies as well, including Anthropic. But I'm not saying Google and Meta, because they already have a lot of products out there, so they can create models from that. But for OpenAI, they need to create everything from scratch. Same is for Anthropic, right? So they need to move very, very fast, and that's the reason Anthropic is moving very fast. OpenAI was moving very fast. I think they will also catch up in some time. But leadership, I'll agree ki there's problem with leadership. If we had the OG OpenAI team, that was Mira Murati, Ilya Sutskever, because if they won't have left OpenAI, even the Anthropic CEO was once in OpenAI, right? So if they had that OG team out there, I think OpenAI would be unbeatable.
What do you think the most likely future is? OpenAI survives, OpenAI gets acquired by another company, or just collapse completely?
I think OpenAI will survive. Because I think the only problem which OpenAI currently has is of the GPU problem. If we somehow figure that out, okay, we don't need a lot of compute out there, do the similar kind of stuff, and that's happening because Google doing the research, like they launched the Gamma, DeepSeek launched the R1 and showed okay, forget about the compute, because before that, what GPT 3.5 to GPT 4, it was just training data. They train on much bigger data, and the accuracy become higher out there. But DeepSeek said, okay, no, you don't need a lot of compute out there. With just $5 million, you can just train the model, and that's seen the whole equation out there. So if a small company can do it, I think OpenAI will also figure out that thing, and maybe they will
Alright.
launch video model out there as well, maybe in future.
Yeah.